are live from Bloomberg's world headquarters in Midtown Manhattan. I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Coming up, Bitcoin surging to the top of the financial leaderboard last quarter. But how durable is this year's rally? Veteran trader Glen Goodman weighs in.
And Citi says trillions of dollars in assets could be tokenized by 2030. We'll talk about what that means and what it's going to drive mass adoption of blockchain with EY's Paul Brody.
And one meme token continues to benefit from Elon Musk's Twitter antics. We've got the details on Doge. So all of that is ahead, but first, let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will find is that broadly it is an update for digital assets, including Dogecoin, which has rallied substantially over the course of the last several days after a picture of Doge ended up on Twitter in replace of the bird when he tried to go to the homepage, that leading to a rally. And that particular meme token, if you will, up about 5% on the day. But as for some of the more big guys, more established players in the digital asset space, Bitcoin continues its rally up about 1.8% on the day. We are right around that $28,000 level. Ether, on the other hand, at $1865, outperforming Bitcoin up about 5%, and Binance Coin as well, higher by about 3.2% on the day, Matt.
All right, well, Bitcoin ended the first quarter up more than 70% ahead of a lot of other major asset classes. I mean, if you take a look at this chart, you can see the massive gains for the OG crypto coin doing much better than tech stocks. We talk about the NASDAQ 100 back into a bull market since its lows on December 28th. The S&P year to date up about 7%. And oil, even with the gains that we've seen since the surprise cut on Sunday, down 5% year to date. So it's pretty amazing that we've seen such an outperformance even after the collapse of FTX and the CFTC lawsuit against Binance. Galaxy Digital CEO Mike Novogratz says rising crypto prices suggest that an energized investor base is shrugging off the crackdown concerns here in the U.S.
Our industry didn't comport itself very well. So now we're under assault from the U.S. government. We're seeing overseas lots of activity in domestic government that's really trying to, smush an industry. Despite all that, prices are going higher. I'm bullish as can be, mostly not because all the institutions are going to come in, that's been slowed down, but because the people that started this revolution are re-energized. In a lot of ways, this is crypto's moment.
Now, with Bitcoin heading higher, there are still some interesting moves under the surface. And for that, Shonali Bassick is here with a closer look. Shonali?
Yeah, thank you, Matt. Well, let's take a look under the surface because the exchange volumes of Bitcoin trading alone, volumes have surpassed $24 billion per day for a period during the end of March, according to the block. But more recently, take a look at how spot volumes have come back to below $7 billion. That number is above where we were earlier this year. But again, it's still much lower than where we were before. There are also interesting movements among decentralized exchanges, though, Matt. Matt Hogan, the CIO of Bitwise Invest, notes that the March volumes on Uniswap were also billions more than was seen at Coinbase, the largest U.S. crypto exchange that's more centralized, allowing more movements between fiat currencies and cryptocurrencies. While institutions are more privy to trading on big crypto exchanges like Coinbase, retail investors do flock to DeFi exchanges, which are more peer-to-peer and facilitate trading between different asset classes in digital assets. But if you take a look at how retail investors are trading, even Bitcoin, you can see that they are dominating. Galaxy's Alex Thorne points out that over the course of the year, Bitcoin whale traders have been declining, but addresses holding fewer than 10 Bitcoin have been ticking up. Now, of course, there are still risks as Bitcoin tops $28,000. Institutional liquidity provider Paradigm says that options markets are still showing real downside risks, but recently they have had near record days of volumes on certain Bitcoin derivatives that go out all the way to March, with demand to own Bitcoin at above $34,000. A Paradigm executive says this kind of call option demand has cooled a bit, but a lot of it had come when Bitcoin prices dropped last week in the wake of a regulatory crackdown of Binance in the United States. Now, another big risk, however, even with prices topping $28,000 for Bitcoin, is the idea that trading volumes are waning, and that draws questions about demand for the asset at these prices, Matt.
All right, excellent points there, Shonali. Let's put them all right now to Glen Goodman, veteran trader. He's also the author of the book, The Crypto Trader. Glen, let me get to that liquidity concern that Shonali just addressed. Is it necessarily the case that in low liquidity, the price would rise? I could imagine that Bitcoin would just as easily get smushed, to use Novogratz's terminology, in low liquidity. I mean, somebody's got to be there to lift the offer, right?
Yeah, I mean, look, we're in a situation of low liquidity, low volumes compared to what we've seen traditionally, but that's kind of typical when you're, not in a roaring bull market, and it's been a good couple of years now. So most of the institutions have more or less left the space. There's just not as much interest as there was, and of course the liquidity concerns are tied to this Operation Choke Point 2.0, as it's being called, the way that the US government is encouraging its regulators to kind of put pressure on banks that deal with crypto and that kind of thing. So, there are a lot of different players all sort of pulling back from the space. And as you quite rightly say, that means that Bitcoin is bound to be more volatile in an upwards direction, but also possibly, in a downwards direction. We're already seeing volatility rise, and it could get worse. So don't be surprised if we get, big moves in one direction or another. But actually, I'm bullish, like Mike Novogratz. Not perhaps as bullish as him. He's like, I'm totally bullish and investors are energized. Now, I wouldn't go quite that far. We're still just sort of days in this rally, but nonetheless, we're seeing bullish signs. We've seen Bitcoin react in a very positive way, despite all of that bad news that we've seen. It's looking good to me.
Well, Glenn, I've had so many conversations here in Washington about Operation Choke Point 2.0. That's something I've been hearing for weeks now. And it also suggests that perhaps in the longer term, the U.S. is going to be a less friendly place for crypto in general. So what fills the gap? What does that indicate about how long these liquidity challenges could persist?
It's a tough one because we just don't know what the US government is going to encourage regulators to do next, or indeed what the regulators will do off their own bat. We know that they're pretty negative and are bearing down on crypto. How much damage can they actually do? Potentially quite a lot. Let's face it, this is the United States we're talking about. It is the big kahuna country for finance throughout the entire world. And the dollar is the global reserve currency. All of this is crucially important. And yes, they really could bear down on Bitcoin. Okay, they're not affecting the price at the moment, but the whole crypto space is sort of running for cover. And until the crypto space sort of finds other countries that perhaps it feels more comfortable in, those might turn out to be the EU or even the UK, where I'm based. Over here, we're hearing much more positive sounds out of the government, or of course, parts of the Far East might turn out to be more hospitable. So it's not necessarily the end of the road for the crypto industry if the US turns against it, but it's certainly a major stumbling block, let's be honest.
Yeah, well, Glenn, you just said there essentially that policymakers and regulators to this point aren't affecting the price. So what is affecting the price? What kind of correlations do you see? How is Bitcoin tied and or not to the macro picture right now?
Right. Well, this is the good news, really, and it's partly why I'm still bullish on Bitcoin. It's because, as you rightly said, the stock markets are now, or Matt rightly said, the stock markets are now in more of a bull market than they were before. And NASDAQ in particular, of course, has been doing very well. And when you look at the correlation between NASDAQ and Bitcoin, the same correlation we've been talking about for more than a year now. It started in November 2021 when Bitcoin started going down along with tech stocks. The ups and downs kind of mirrored each other all the way down. And now, on the way back up, it's the same story. This is not a coincidence, okay? Investors have kind of put Bitcoin and Ethereum to some degree in the same pot as tech stocks. So they're considered, risky, They're considered risk assets now, certainly, but there's also a parallel story which kind of muddies the picture a bit, but is also good for Bitcoin, which is, of course, this flight to safety after the banking crisis that we had just a few weeks ago. Some people are now again starting to see Bitcoin as a possible monetary alternative to the dollar. And why do I believe that? Because look at the correlation between Bitcoin and gold. Bitcoin and gold both rising. Gold is benefiting from that same effect of people fleeing to a different kind of money, and likewise people fleeing to Bitcoin at the same time. So you've got a kind of double reason really why Bitcoin is going up at the moment. On one hand, you've got tech stocks going up. On the other hand, you've got gold going up.
Glenn,
both of them are encouragements to the price.
Glenn, I learned very early on that you never share your private key with anybody. I had some Bitcoin stolen from me on live television about 10 years ago. Do you think that investors are moving a substantial amount of their holdings off of centralized exchanges and either keeping them, in cold storage at home or putting them in decentralized exchanges?
We certainly seem to be seeing a fair amount of that going on, yes. Is it enough to make a massive difference to the overall picture and liquidity? It's certainly making a difference, yeah. And but at the same time, it's a good thing, isn't it? Like you just said, not your keys, not your crypto, they always say. And that's true. And if people have learned the lessons from FTX, then that's a fantastic thing. And now, of course, with Binance, the CFTC coming down on Binance, people got scared again, withdrawing money from Binance. And of course, that's the world's biggest exchange by far. So as a crypto enthusiast, I really don't want to see Binance get into serious trouble or Binance to fail. That would be really, really annoying apart from anything else. We wouldn't be left with any massive exchanges. All we'd have left is Coinbase, which is far smaller.
All right, Glenn, I think you'd get a lot of pushback on that. Some people would welcome that turn of events, but they have to be the seriously old school OG crypto traders. Glen Goodman, or holders, right? Or hodlers. Glen Goodman, veteran trader and author of the book, The Crypto Trader. Really appreciate your time. Coming up, Paul Brody, EY's global blockchain leader, joins us.
Yeah, looking forward to that. Plus, the new face of Twitter. I say that with a question mark. How a logo change sent the price of Dogecoin soaring.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
This is Bloomberg Crypto. I'm Kaylee Lyons in Washington with Matt Miller in New York. Well, as much as $5 trillion may transition to new forms of money by 2030, rather. That's according to research conducted by Citigroup. The study found roughly half of that money could be linked to blockchain technologies, including central bank digital currencies and stablecoins. The report reads, quote, almost anything of value can be tokenized, and tokenization of financial and real-world assets could be the, quote, killer use case blockchain needs to drive a breakthrough. Joining us now is Paul Brody. He is global blockchain leader at EY. Paul, thanks so much for being here. Does that view seem right to you? How optimistic are you on the adoption of blockchain technology?
I'm actually pretty optimistic, and I would actually say that this is somewhat conservative view. If you look through the Citibank report and you look at the own projections that we've made, that would imply actually a slower rate of adoption of crypto than a lot of other, or really tokenized digital assets, than a lot of other things like cloud computing. So I think $5 trillion by 2030 is actually a fairly conservative calculation, but it's quite reasonable, and I'm quite positive on it. It gives us plenty of time to work through some of the regulatory challenges and the other technology enablers required to scale it up that massively.
Okay, well, you just referred to some of those challenges. I guess a question is really what stands in the way? What is the greatest barrier?
There are really two barriers, I think. The first is a regulatory barrier. So there are rules, they're not completely clear, and people feel uncertain about them, particularly in the United States. So there's going to be more action in Europe, which your prior guest was talking about. We're going to see a slow re-ramp here in the US as the rules become clearer. But the second thing is scalability and privacy technology on public blockchains. So today, there really isn't any real privacy in the public blockchain ecosystem. But if we're going to have people keep their major investments, if we're going to have people track real world assets, which are uniquely identifiable, then we're going to have to get through and deploy privacy technologies into the public blockchains with identification and not for anonymity, but for confidentiality.
Paul, one of the things I've always wondered when people talk about the utility of the blockchain is how that translates into an argument that I need to own the token. I mean, a lot of these blockchains have tokens that are incredibly divisible, right? So you only need to own a few in order to tokenize very many assets. Is there any reason that, for example, if you're going to tokenize something on Ethereum, I think that the value of Ether should rise?
So that's one of the toughest questions that exists for people who transact in this space, because in general, they talk about sort of the cost of Ether you need to do a transaction is in terms of gas. And it's a really, really good analogy because when the price of gas goes up, what do? They buy more efficient vehicles. When the price of gas peaked on Ethereum a couple of years ago, we saw people really making very serious investments in layer 2 technologies, in improving the maturity of their algorithms. Over the last 5 years, for example, we've improved the efficiency of our privacy technology by a factor of 1,000. Now, I think it's really hard to predict. Is there going to be 1,000 times more demand? I think eventually, yes. One of the lessons from the world of computing seems to be that the industry gets larger, even though the costs get lower, because people consume much more of this transaction capability and processes. So broadly speaking, I think there is a possibility of a good relationship between demand and the value of the underlying sort of ecosystem asset, particularly in the case of Ethereum, where the asset is used to pay for transaction costs. That's really, really important.
How much of a stumbling block is the SEC's, the concerns that the SEC has about staking to Ethereum?
I think it's a medium-sized one. I believe it's going to get worked out. One of the things that I'm really bullish on and people don't talk a lot about is the fact that actually there's dozens of use cases for the enterprise that aren't financial services. You don't need regulatory approval to do inventory management, physical asset management, supply chain management, procurement operations. It's great if you can add the financial component. You can do things like borrow against the value of your inventory. But for a lot of enterprises, we're going to see really rapid growth in blockchain adoption that's unrelated to financial engineering and is much more focused on business operations. And we believe, our own forecast is that Ethereum in particular is going to become the foundation system for B2B integration and collaboration.
I was looking at a post you wrote for CoinDesk, and this relates to the kind of cost aspect of all of this, saying that at EY, it costs you about $500,000 to add a new chain to your blockchain analyzer platform, and you spend between 10 and 20% of that each year keeping it up to date. I mean, how cost prohibitive is it to add multiple layer 1 blockchains? I mean, I'm just wondering what this means more widely.
So I believe that actually what's happened is we've reached the point where there are too many layer 1 blockchains. And in particular, the technology industry loves standards. So I think we're consolidating towards really just one for programmable tokenized assets, which is Ethereum. And then Bitcoin will continue to be a high value digital asset. But I think for enterprise users, it's going to be Ethereum. And really, a lot of the innovation action and the bulk of the transaction business today is shifting into Ethereum layer 2s. So I think actually the path forward for most other layer 1s is probably they're going to have to reshape their business to become a layer 2 on Ethereum.
All right, super interesting stuff. Thank you so much for joining us. Please come back soon. Paul Brody of EY, we appreciate your time. And for more time talking all things crypto, make sure to check out our Bloomberg Crypto podcast, which dives deeper than the daily market buzz to explore the stories and the people shaping the ever-evolving digital landscape. Look for that every weekday, wherever you get your podcasts. This is Bloomberg. This is Bloomberg Crypto. I'm Kaylee Lyons in Washington with Matt Miller in New York. Now let's get to some crypto stories that caught our attention this week. Former senior officials at Gemini are rolling out a token backed by U.S. Treasury bills. The token, known as T-bill, will be offered on decentralized finance platform OpenEden and offer around 5% yield. It's response to a gulf in returns between traditional finance and decentralized crypto lending.
France is exploring ways to regulate decentralized finance. The country's banking supervisory body has opened a comment period on a series of proposals and invited crypto asset companies, clients, and observers to take part. The scrutiny was prompted by the collapse of FTX last year.
And Twitter seems to have gotten a facelift of sorts. Some users have reported seeing the site's home button, usually a solid blue bird, replaced with a cartoon Shiba Inu face associated with Dogecoin. CEO Elon Musk posted a photo of an earlier exchange in which a Twitter user urged him to make the change. Dogecoin then jumped as much as 30%. And Matt, I don't know if I should feel special or if everyone has it, but my home button is now the face of Doge.
It's so weird to me, and I'm impressed by the longevity of Dogecoin. I've always thought about it like platform shoes or ripped jeans, something that's a fad now, but that you will definitely regret later on in life. Nonetheless, it has lasted years. No small thanks, of course, to someone like Elon Musk.
Well, I was going to say, I feel like it keeps being brought back to relevancy because of billionaires that own social media platforms like Elon Musk. But it just goes to show you how there is still a whole aspect of the crypto universe, which really is just speculation, assets that aren't necessarily tied to anything fundamental. Remember, this was supposed to be started as a joke.
Yeah, and let's not forget also that Mark Cuban helped out as well with Dogecoin. There are a lot of people, of course, who think all of crypto is that kind of fad that will backfire eventually, but it's pretty difficult to make that argument when you look at the stability of Bitcoin, even after the collapse of FTX, even after the CFTC suit against Binance. With all the problems that this industry has had, it is, I will remind our viewers again, an asset that has climbed 70% year to date and is still hovering at over $28,000, more than 10 years, 13 years since it was invented.
Yeah, it's a really good point. We'll see, though, if we can crack that $30,000 level and on a persistent basis. So we're going to keep watching for that. And, of course, we will be back here next Tuesday at 1 p.m. Eastern, Matt, with an update on all the prices.
Absolutely. Coming up next week, Danelle Dixon, CEO and Executive Director of Stellar Development Foundation, joins us. This is Bloomberg.